Good morning. This is Mark Sebastian, the founder of OptionPit.com, and welcome to the AM Volatility Report. Well, let's talk about first what's going on here at OptionPit tonight. Consistent income with weekly options, starring me. All right, you go to OptionPit.com/weekly trades to get registered. It's going to be really good. All right, I've been playing around with the slides the last 2 days, and I'm kind of excited about it. It's going to be, good 45 minutes of time well spent. All right? So with that, let's talk about what's going on in the markets. Well, here we are. We're up 10. Why? Well, why did we end up down 4? There's just really no reason. All right? You have a situation where, it looks like the Fed is not going to do anything, all right? And everybody needs to figure that out and stop worrying about Fed speak and start looking at the actual market, all right? Because that is how we'll make some progress. Earnings season's coming up, but I don't think it's going to be as bad as people think. Oil's kind of priced in, and that should be something that people should be aware of. Oil's off a little bit, but, one point I want to make. So we've got that big RDS, Royal Dutch Shell, BG group. All right, that's not it. BG oil. I don't know. There's something, whatever. The BG oil group. And it's a foreign stock. Anyway, they're paying $70 billion. All right. Now, a lot of people are saying, oh, look at that rich valuation. All right, look at that rich valuation. Well, let's think about this for a minute. All right. Let's just, we'll pull up USO, and let's just pull up a chart of USO. All right, 2-year chart. You can see USO was, let's just go back to September of 2003 when USO was more than 100% of its current price. All right. So September 2013. Well, let's look at the valuation of Royal Dutch Shell there. All right. We're going to go back 2 years. All right. And, well, that maybe not Royal Dutch Shell. Let's look at ExxonMobil. Well, my point is, we had these higher oil prices, earnings up. You can see the growth that was happening all through higher oil. All right, USO kind of the same, right? You have this consistent high oil for a period of time. Double where it is now. And RDSA during that period of time gets up to 80 bucks. All right. ExxonMobil gets into the 100s. Low being 90. All right. Chevron, CVX, Chevron Texaco, 20 bucks higher. Let's look at like a name like Halliburton. All of these names, all these names are trading at a 20, 30, 40% premium. All right. So what does this merger mean? This merger is a play on oil bottoming as much as it is, people want to sit there and say, oh, it's about, they're going to make all these comments about how they're going to be more efficient and this and that. No, it's really a play on buying cheap assets that are relatively inexpensive when oil is off 50%. So they're paying a 50% premium with oil down 50%, which means they're kind of buying it at a level where oil is up, maybe 50% from here, not 100% from here. I mean, that's not that simple a math. But the point is, it's a play on the asset of oil finding a bottom. So that is why, and you're going to see more of these type of mergers. All right, I'd be looking at stocks that dig for oil, that are financially sound and have market caps below $30 billion. We could see a bunch of those get lifted. All right. Now, interest rates, pretty stable. Volatility just keeps going lower and lower and lower. UVXY, another all-time low. Today, touching an all-time low, would close at an all-time low. Gonna break 10 here pretty soon. It's broken down. VXX finally really starting to break. That consistent low vol is going to cause it problems. If you look at a 1-year chart, as well as we think UVXY is doing, or VXX is done, it's off almost 50% this year, in a year over year. All right, if volatility stays lower, we had a really nice volatility period. If volatility stays in this kind of range for 3 or 4 months, it could be a $10 stock. All right, it's off 75% over 2 years. UVXY is even uglier, right? You want to see something ugly? Look at a 2-year chart of this sucker. You were short at 2 years ago. You were short at $270. It's $13 now. It's just, this stock is death. This ETN is death. All right, I think we're going to see a 13 handle today in VIX. We could see the April future back off a little bit, probably below 14, and we could just see stocks higher. All right. We're starting to hit some earnings. We had El Pollo Loco go public today. Again, I believe. Or what was it? It was another one that's similar to them. So there's some public offerings coming out, but I think the big news is, I think a scan for stocks that drill for oil that are, in the $20 to $30 billion range and have a good, strong balance sheet, those could be some serious takeout targets. All right, folks, on that note, I hope everybody has a great morning. Again, check out the webinar, optionpit.com/weekly trades. Give us a call, 888-TRADE-01, or call us or email me, mark@optionpit.com, if you have questions. All right, folks, have a good morning. We'll be back in about 15 minutes.